Hi, and welcome to the second part of our Forex Trading Introduction course. In this section, we're going to be finalizing the basics of Forex trading and trying to get our newbie traders to understand the trading platform and trying to understand some of the market's analysis, the type of market analysis, so that in future courses we can now go into more in-depth Forex trading technicalities. My name is Nana Obin Alexander, a Forex trader and obviously a trainer. Well, it's important to understand the disclaimer that when it comes to Forex trading, there are risks involved. And so it's important to make sure that you understand that there are risks involved before you go into the markets. But that said, here's what we'll be covering in this course. We're going to be looking on how to set your MT4 platform, especially for our traders, our newbie traders. So you get familiar with the platform, you see how to set it up, install it, and then get familiar with the platform. And then we'll wrap up by looking at the different market analysis types and explain more into them and see how we make money or traders make money using those types of analysis. So without wasting further time, let us dig into setting up your MT4 platform. If you watched the part one of this course, we talked about your broker providing you a trading platform by which you can use to access the markets. Well, MT4 is the platform by which video forex traders like you and I use to access the markets because from this MT4 app, we can gain access to market charts and also the other tools we can use to do our analysis while we place our buy or sell orders. So it's very important to get if you're going to have to trade forex, you're going to need your Metal Trader app or maybe a web trader, but mostly the most common one is the Metal Trader. And the beautiful thing is you can install it on your PC, on your tablet, and on your phone. Okay, let's quickly go through installation of the Metal Trader app. You simply want to go to our website, gemnicap.com, gemnicapmarkets.com. So once you're on our website, you go under trading and then you go to trading platform. So under trading and trading platform, you'd see the MT4. So what you want to do is download the specific one that is for your device. So if you're on a PC like I am, you want to download the Windows version, and then you can also use the web trader. If you're on an iPhone, you want to download the iPhone, the Apple version of the MT4, and then if you're on an Android, you want to download the Android version. It's pretty straightforward. So once you click on any of this file, it will download and then you install it on your device. Now, once you've installed it on your device, you should have something similar to this. So this is what it would look like. If you're on a mobile phone, it would not obviously it would obviously not be like this. It would also walk you through how you can set it up on your mobile phone. But for your PC, once you load up, it should bring up a dialog box and that asks you to put in your parameters like your username or maybe you're creating a new demo account and you just fill that in. But if you want to sign into your live account, you can use that box that shows you username or your login account number and your password. But if you did not do that, you can obviously click on this account, right? Click on accounts and click on either log into a trade account or open a demo account. So you can log into a trade account, and then here you want to put in your Gemini Cap password. So your account name, sorry, or your account number, and then you want to put in your password. You get this information from your mail. The mail will send to you for you see your login ID, and then you put the password you've created for your MT4. And then if it's a live account, you would not select demo, you select Gemini Capital Live. But this is a demo, and so you can log in. I'm already logged in, so I wouldn't do that. So once you sign in, you should have something similar to this. And with this now, you can now proceed with, understanding or digesting or divesting into what all these features is. And we'll look at how we can buy and how we can sell and how we can do, some of our analysis. But if you're on a mobile platform, this is the way it would look like. If you're on a mobile device, if you install the app, you open up the MT4, the MetaTrader 4 app, and you have something like this. If you already have MetaTrader, you can also just click on the menu button at the top left corner. So once you do that, it should come up like this. You click on accounts, manage accounts, or you click on get started in this case, and then you click on the plus button and choose to log into an existing account, or if you want to create a demo account, and then you search for the broker, in this case Germany Capital. If for your live account you select Germany Capital Live, if it's demo you do the demo, and then you put in your password and your account name or account number, and you sign in. It's that simple. Now let's go back to the platform. And once you're signed in, you should have something like this. Personally, what I like to do is clear up this. So I like to remove this and make it bigger. And then I prefer black on or white on black. So if I go, what I did here was I right clicked and clicked on property, or you can press function F8, and then I do select black on white, and I have this. This is how I prefer my chart. So as you can see, if you zoom in, you see that this is no candlestick. This is actually bar chart. So the way you can actually switch between candlestick and bar chart, you have see these toggles here. So candlestick, you have candlestick here. And so what you do is if you click on candlestick, you would have it switch over to candlestick. There's also a line chart here. So if you click on line chart, you also have it switch over to line chart. Mostly we're using a candlestick, so we put it in a candlestick for more visual effects. Now, besides the toggle between the candlestick pattern, you can obviously you see that there are several other buttons here. For example, this is the zoom in tool. This is also the zoom out. You can also use your plus and minus button on your keyboard to do that as well. Right now, I'm using the plus, shift plus, and then minus to zoom out. Also, you have this scroll. So what this does for you is if you are if you're far away from the chart and you want to go back to the current price, you click on this, so just scroll back to the most recent price. That's what that does for you. And then this is how the chart is normally. If you click on this one, it would give you room. I like having some room here so that it's not so close to the edge. So this is how I like it. And then here is your market watch. Here is where you see currency pairs. So what you do if you just load this up, you want to right click and click on show all so that all currency pairs would appear here. And you can minimize this, and then add more charts, as you wish. Obviously, as you can see, I have a lot of charts here, so you can add new charts. So all you just need to do is click, drag, and drop, and then you can expand, minimize, just so that you can have some space. But if you have it like this, let's say you have this full, let me use this. So you have this like this. You can see below here you have all your pairs, and you can scroll to the end here. Okay, so that's actually quite easy for you to use. And then what else do we have here? In the insert button, you can insert indicators. We'll look at that in some subsequent lectures. You can insert shapes. You want to draw on your chart to signify, to illustrate certain things. You can, highlight areas. You can use the eclipse tool to highlight um, areas of support, or, areas you're watching and things like that. So I just deleted that. You can also insert, lines, channels. We'll look at a lot of this in the next and in some subsequent, when we're actually doing more on technical analysis, we use some of this. You can also add text if you want to keep, so that when you come back later on, you can have an idea of what you were thinking when you open up the chart. So that's what that does. Now, in terms of trading, so if you get a signal or you want to buy or sell, what you want to do is go to new order. So if you click on new order, this dialog box will pop up. So you click on new order, and then what you see here is the currency pair. Here is the lot size. So remember, we have one is standard lot. So this will be a standard lot. That means 1 pip is equals to $10. 0.1 is a mini lot. So you can type in. So we have 0.1. You can do 0.01 or maybe 0.02 and stuff like that. So that's where you type in your lot size, and then you want to put in your parameter. So you want to put in your stop loss. So if you have a stop loss value, you can put that in here. So you can use this is a measuring tool, crosshair. So you can decide, okay, let me put my stop loss at 73.23. So you can just type that in here, 0.7323. That is your stop loss, and then you can have your take profits, somewhere zero ever. So let's just do 68.90 or something, and then you can sell. So if I click on sell now, this would actually sell this pair. So that order is taken. So you can see this is where my order was taken. This is my stop loss. This is my take profits. Now, if I also want to place a pending order, so I want to probably sell this pair, but maybe I want to sell it at a future price. I want to sell the pair, but only if maybe it gets lower than this. So let's say this, if you look at that, is 71.27. So I want to sell if the price gets to 71.27. So it's still you go to new order. Instead of market execution, what you pick is pending order. And since you're selling at a future lower price, so what you'll be doing is sell stop. Now, let me try and explain that a little bit. If you want to buy at a future lower price, you want to buy at a future lower price, you use buy limits. If you want to sell at a future higher price, you use sell limits. If you want to buy at a future higher price, you use sell stop. And if you want to sell at a future lower price, you use so I think I switched that. If you want to buy at a future higher price, use buy stop. And if you want to sell at a future lower price, use sell stop. You'll get familiar with this as you use it often. So, but we want to sell at a future price that is lower than the current price. So what we'll do is we'll do sell stop, and you can take your crosshair. Let's say we want to sell at, I'm just using a figure here. So let me say 71.14. So the price, you put in the price you want to sell at here, 71. That's not 0 point, that's 0 point. Okay, 71.14. And then you put your stop loss. Let's say our stop loss is at, let me just say 7,300. So let's just do this, 7,300. And then let's say our take profits is also here at 68.90. That's 0.6890. And so once we click on place, it tells us that our order for sell stop order has been placed successful. Now, if you go to trade section here, you would see your open trade. So this is your open trade, the first one we took. If you look at it, that one is open. We sold here. Here's our take profit, our stop loss, and here's our take profit. That is this one you're seeing. Now, if you scroll down a little, you would also see the pending order we placed. So the sell stop and the price at which it would enter is here, 71.14, which is here. Here's your stop loss, 7,300 above, and here's your take profit, 68.90 at this point. So that's how you place an order in the market. That's how you place you can buy at current price, where you buy or sell at a future price. So that's actually pretty straightforward. These are tools that you can use to make your chart, because when you look at the chart, you can see that there's not much sense in the market. You just see a lot of let me call it zigzag. But once you start adding features, once you start adding let me put it like this: when you start adding drawings or start adding patterns to the market, you start seeing the market take form and take shape. As we dive into technical analysis, you'll be able to make sense of this chaos. Let me put it like this: you'll be able to make sense of it, and you're able to see what the market is doing, and possibly um, how you can profit from future movements. But before we dive into that, let's go back to our PowerPoint and yeah, let's go back to our PowerPoint and continue from where we were, which is yeah. So we've shown how to do that. Now, market analysis. Market analysis, there are three major types of market analysis. The idea is to make money trading forex, and there's three major, not very, not all equal, but there are three different market analysis as they are known, and the three of them are technical analysis, fundamental analysis, and sentimental analysis. Now, technical analysis would explain, fundamental analysis will also explain, and sentiment analysis would also explain. But as traders, mostly when we go into what we'll be looking at mostly is technical analysis, because that involves charts. Technical analysis can also be synonymous to chart analysis. But let's start with sentimental analysis. Now, sentimental analysis or sentiment analysis is a way by which we gauge by which we make our decision based on feeling. So as the word implies, sentiment. It is gauge on how other traders feel about a particular currency pair. So if there's a particular feeling to the markets, like if most traders feel that the market is bullish, you see that many traders would. Hello, and welcome to the second part of our introduction to Forex trading course. In this course, we're going to be wrapping up the basics of Forex trading so that we can now move into more advanced Forex trading technicalities and see how we can make more money in some subsequent course. But we need to wrap up the introduction so that, especially for our new traders, you can understand the platform and how to use it. My name is Nana Obin Alexander, and I'm going to be your host as we go through this journey. I'm a Forex trader and a trainer. There are disclaimers, so it's important to understand the disclaimer. There are risks associated with Forex trading, and that is what this tells you. With that out of the way, let us look at the content of what we will be discussing in this course. We're going to see how we can set up our MT4 platform, and then we're going to see how we can get familiar with the platform itself, the features, see how we can place trades, see how some of the tools there that we use to make it easy for us to see what is going on or what price is doing. And we're going to finally wrap up by looking at the types of market analysis and how they work. Without wasting further time, let us begin by setting up our MT4 platform. In our last webinar, we talked about how your broker enables you gain access to the market by providing you access to the market. And this is done through electronic trading platform, and the most popular one is the Metal Trader 4. This platform enables you to get access to the market, to chat, and to other tools so that you can be able to place your buy and your sell trade, and as well as do analysis so that you can, in the future, be able to use the information that you've prepared down. Now let's go through the process of setting up our MetaTrader platform on our devices. You'd want to go to ng.gemini.capmarkets.com, and if you go to our site ng.gemini.capmarkets.com, this is okay. Let's load it from the beginning. So if you get to the home page, what you want to do is go to trading. So under the trading section, you click on trading platform. So under trading, you click on trading platform. So once you do that, you would see this window. So it says Metal Trader 4. So what you want to do is go and click on the one for your device. Meaning, if you're on an Android phone, you want to click the Android version. If you're on iPhone, you want to click on the iPhone version. And if you're on the Windows, like me, you want to click on the Windows version. So you click on it, it installs, it is straightforward. I'm not going to go through that because it's pretty straightforward and I already have it installed on my device. So once you do that, what you want to do next is go to your platform. So let me take a fresh chat. So this is what it's going to look like. So you have um this is your chat screen, your terminal window, and what it shows you here is just price. And if you can see, if you zoom in, you see this zoom in button, this zoom out. You can also use the plus shift plus button on your keyboard, and you can also use the minus button to do that as well. But if you notice, it is not candlesticks. So what we want to do is change it to candlesticks, and you easily do that from here. So you just click on this, it says candlestick. So you click on it, it turns to candlestick. Personally, what I like to do is turn this to a black on white because I prefer that. So I go to property, and you can leave it as this if you're comfortable with it, but I like to have my chart looking like this. And then another thing I do is to make some space between the edge so that I don't have to be so like I know when I get to the end of my chart. So if you click on this button, it says shift end of the chart from the right, but as if you click on it, it adjusts. You can easily, move this around and it will shift it. So this is how I prefer it. Now this button here, it enables you to scroll. So if it's turned on, if you try to scroll, it would take you back to the beginning. So if you click on it, it will take you back to the beginning of the chart. And here you can select the time frame. So if you click on 1 minute, what it means is each candlestick here will represent 1 minute of trading. If you click on 15 minutes, each candlestick represents 15 minutes of trading, and so on. 4 hours, daily time frame, and so on. So this is the weekly and this is the monthly. So this, you can just easily toggle between the time frame, and this will come when we are looking into some more in-depth uh, um, uh, technical analysis. We'll see how multiple time frame aids us to make better trading decisions. Other things on the chart here are some tools that we use to make us see patterns in the chart. And you have the horizontal line. So if you click on it, you can draw horizontal line anywhere on your chart. If you have the vertical line, you can draw vertical lines anywhere on your chart. And then you have this crosshair. This is a measurement tool. So you see it's showing you the price to the right corner, and then at the bottom it shows you the time. So this is a measurement. You can use it to track, measure things, and measure the distance as well. Okay, so let's do it with this for now. And then other things you have here, you have indicators. In some subsequent courses, when we'll be looking at technical analysis proper, we'll use some of these indicators, not all of them, but we'll use some of them, some of these indicators. Also, their channels, Fibonacci's, we'll use this. There's also text labels, so you can add text to your charts. You can, write this, you know, pending. Let me just say this, name it something like pending. And then in the text, you can say buy, uh, not that, you can say buy if price goes above this, something like that. And you can move it around so that whenever you come back to the chart, you can see what you were thinking when you made your analysis. Okay, so let's do it with that. And then what else is here? Now let us look at how we place orders, how we can place an order. Yeah, meanwhile, if you when you log in or when you open this app for the first time, it would ask you to put in your information. Now, if you have created a live account, you go to your email and pick up your account number. There's an account number, your MT4 account number, and you input it here. So it will look at something like this. Let me say log into a trade account. And then you can put in your MT4 account number here, put in your MT4 password, and click on MT4 Live. That's for your live account, and log in, and it will take you open up the terminal window properly for you. Well, with that said, let's look at how we place a trade. Let's say we want to buy or we want to sell a currency pair. So let's say for this pair we want to buy, because the market is moving higher. So let's say we want to buy and take advantage of that. What you do is you click on, let me do that again, new order. If you if you're on a mobile phone, you would click on to be at the top right corner. So you see a plus button, something like a plus button. So you click on it, new order, and it bring up a dialog box, something like this, that just gives you area to put informations that are necessary. So here you have the currency. Here you is where you impute your volume or your lot size. So remember when we explained lot size, you have one is equals to standard lot. So one here is one standard lot. That means one pip is equals to $10. Four standard lots means four pip is equals to, one pip is equals to, do the maths, one times four, which is $40, and so on. Well, let's say we're using 0.5, so one pip is equals to 0.5, and then this is where you put in your stop loss. So if you have made your analysis and you're buying, because this is another important use of the crosshair, so you want to put your stop loss, let me just say at 137.16, so you can just type that in here, 137.16, and then put your take profits. Let me just, this is just for test purpose. There's no analysis done to this, so I'm just showing you how you can place your trade. So you put your take profits as, let's say, 14200. Let me just use that. You have 142, and that will be fine. So this is for placing a trade at the current price. So if you click on buy markets, it just takes in your trade, and you can see on your screen, this is, although this is not a trade I would want to take because the risk to reward is just bad, but for just for test purpose. So what you're seeing here is, this is your take profit, this is your stop loss, and you can adjust this. So you can click on this and adjust, either you can click on it and adjust it, or you can click on it and drag. So you can do this, yeah, you can do this and drag, and then modify. Okay, so this is your take profit and this is your stop loss. Okay, so that is how you place a trade. Now that is how you place a trade at the current market price, or something we call market order. But if you want to place a pending order, so you've done your analysis and you feel, okay, this market is heading higher, but it's already too high. So what I want to do is I want to buy the market when the market has come down a bit, because maybe come down a bit to retest this place. So let's say you want to buy at the price 136.65. What you do is you go to new order, and instead of market execution, you select pending order. And now there are four different types of pending order. The first one is the buy limit, second one is the sell limit, you have buy stop and sell stop. Now, this is what you think about it. Limit is for, how do I explain this? Now, buy limits, you use buy limits when you want to buy at a future lower price. That means you want to buy, but you want the price to go lower first so that you will get more value. So you want to buy at a future lower price, you use buy limits. If you want to sell at a future higher price, you use sell limits. So if you want to sell, obviously you want to sell high. And if you're waiting, you want the price to go up first before you sell, you use sell limits. But if you want to buy at a future higher price, which is otherwise not usually, usually you want to buy at a low price. But if for some confirmation reason you want to buy at a future higher price, you use buy stop. And if you want to sell at a future lower price, you use sell stop. There are different cases or different times where we would want to do all of those. But most of the time we usually do buy or sell limits personally. So for this case we want to buy limits. and we want to buy at a future lower price. So we want to buy at, let's say, 138, yeah, 82. So we want to buy, so you put in the price you want to buy here, 138.82. That's the price you want to buy at. And then you put in your take for your stop loss. Let's still use the same stop loss, 13700, 137. Let's just do that. And your take profit, 141.16. Yeah, 141.16. And then you place your trade. Now what happens here is the market, this second trade, if you okay, I was doing some tests, and I took a trade, just a test trade for this. Now for this GBP JPY, this is the one that we opened first. You see the trade is already open. But if you scroll down, you see the second one, it has not entered. If you look at here, it shows that these are pending orders. So you have GBP JPY. This is the price. So once the market gets to this price, which is here, it will activate your trade and start buying. And then this is where your stop loss is, and this is where your take profit is. So you see the reason why we might want to do this. You see that there's more risk to reward ratio. In this time we're only risking this much, and we're hoping to gain this much. So you see the risk to reward is now much better. When we look at trade management, we'll explain to risk to rewards much better. But that is how you place a trade in the forex market using your MT4. Now, if you're on a mobile phone, you would also set up your platform quite similarly. So if you're on a mobile phone, you would have an Android or an Apple. Once you set it up, install it, you click on the top left corner for your Android phone, I think similar for Apple, and then you just get started. So you want to click on the plus button, log into an existing account and put in your account information, account number, and your MT4 password, or sign in, open a new demo account. Once you do that, you want to put in the broker, in this case Germany cap. So you just start typing Germany, and you should have this option. So if it's a live account, you click on live. It's demo, you click on demo, put in your login information, and you sign in. Now, that is it for the platform. Now, let's just briefly explain market analysis, because there are three major types of market analysis, and we'll look at what these three types of market analysis is and how they work. So the three types of market analysis are technical analysis, you have fundamental analysis, and sentiment analysis. We'll begin off by explaining sentimental analysis. Well, this is a way by which we gauge the market based on how traders feel, how investors feel about a particular currency pair. And this is quite similar to sentimental love that celebrity or fans associate with their favorite celebrities. So, for example, if you have your favorite celebrity advertising a product, maybe on their Instagram, on their Facebook page, many of their fans who are loyal to them, who have not used that product before, would want to be quick to go and get those products. Not because they know that it works well, but because somebody they feel strongly about is using it. Maybe after they get it, they might not really enjoy it. But the initial thing that pushed them to get it is because of sentimental love for their celebrity. Now, in the currencies, when it comes to for currency trading, we have sentimental attachments too. So, if something fundamentals is what move the market, or is what is the basis of everything. So, for example, if you want to invest in a company, so if you want to invest in a company, you want to buy their stock, you would look at their balance sheet, their financial statement, and see that they are progressing. If there's so much debt in the company, then their stock would not be something that would attract you. So if for example, for no particular reason, let's just say a a celebrity or somebody big just says something nice about that company and pushes the price, and makes the price to go up. It doesn't there's no solid foundation for that push or movement in price. You get that? And so the reason what pushed the price up was just sentiment, pure sentiment. And that is what sentimental analysis is. And we see that sometimes in the forex market. And this is also the reason why there are psychological levels of support and resistance. So you have areas like 1.0, when you have a currency pair 1:1, usually that's just a psychological level that traders seem to just respect. But beside that, we have the fundamental analysis. Well, fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect currency pairs. Now, what this means is the fact that since currencies are associated with economies or countries, and these countries are backed by government, the strength of the government is directly proportional to the strength of the currency. So if a currency is a, if a government or a country is doing very well, their currency would be strong. So if and how do we know that a currency is doing well? How do we gauge the health of a currency of an economy? They are by using fundamental tools. So by looking at data like the GDP, the inflation, the governmental policies, look at the interest rates, all of these things, the unemployment rates. These are what tells us, okay, how is the economy doing? So if the unemployment rate is very high, it means the economy is not doing very fine, because if our unemployment rate is very high, it means the spending power in the economy would drop. It also means there will be scarcity, or there's a lack. And once there's a lack, there's friction. So that economy is not booming, and if the GDP is low and things like that. If it's a commodity based country and the commodity that like say, if for example if crude is rising in price, then the price of the currency or the strength of the economy would also rise in proportion to it and stuff like that. So that is the fundamental reason behind when country or an economy is doing fine, the currency tends to do fine with it. And that is how some long-term investors are able to, gauge positions, make, okay, this economy is looking fine, it's looking good for the next couple of months, and take trading decisions. But besides holding, very lengthy positions, retail traders also look at economic data to be able to make trading, be able to understand the way what direction supply and demand is moving as regards to currency. So when the currency or economy is doing good, the value of the currency moves higher, just as we explained. And the economy is performing bad, the value of the currency drops lower. This picture image was gotten from BB Pips. Now, one very good place we can get economic news is forexfactory.com. So let us do this. So let's go to forexfactory.com and see this. So let's go to Forex Factory. What am I doing? And let's go to forexfactory.com. So you have Forex. Yeah. So this is an economic news outlet, and what it shows us in very simple terms is what exactly is going on, or what economic news are coming out in the respective countries or currencies. So you can see this is dates, this is dates, this is time, this is currency, this is the impacts, and this is the particular news. And then here is the data. This is the actual, the forecast, and the previous. Now, what you're looking at now, if you look at this color coding, you see that they are orange with yellow, orange, and red. Yellow is for low impact news. So that news doesn't really have so much strength as regards the result of the news doesn't have so much impact on the economy or on the currency. Orange means medium impact. So the result has some impact but not so much. When you see red, the ones that you were usually interested in are the red and the orange, but mostly the red, because the red means high impact news. That means whatever is the result of such a news can push the market. Now, the way we read this is like this. So if you've not used this before. If you come in here, your time may not be synchronized. So, what you want to do, you click on the time, click on this time here, and go and synchronize your clock with with your phone's clock or your local time. So this is the way we read it. So you have this news is for AUD, and this is the news, so private capital expenditure. Now, what you can click on this detail to see what exactly that is, and read more on it. Then what you see here is actual, forecast, and previous. If the news has not occurred, you would not see anything on this actual section. And let me show you what that looks like. If I click on more and go to the next day, which is Friday, you could see that there's nothing on actual. Remember this tab here, this section here is actual. So you can see that there's nothing on actual. There's something on forecast and previous. Now, so as traders, we are concentrated on the actual, the results when it comes out. Now, if the result when it comes out, the actual result is better than the previous or the forecast, not the previous. If the actual is better than the forecast, it is good for the economy of that currency pair or for that particular currency. That means that particular currency would strengthen. So in this case, this is the forecast. So analysts forecasted that the private capital expenditure for AUD, the Australian dollar, on this time would be minus 8.2%. Now, this is what they forecasted. This is what they were expecting. But when the result came out, it came out as minus 5.9. You can see that minus 5.9 is better than minus 8.2. That means the Australian dollar would have strengthened. This would have been good news for the Australian dollar. That means against other currencies at that time, especially the weak ones, the Australian dollar would strengthen. Now, if the forecast is better than the actual, it is bad for the currency. You can see it here also. For the Japanese yen, this is what they forecasted, 6.3, but what it ended up becoming is 6.1. So basically, there are some traders who just trade high impact news. So high impact news, like all these ones with high impact, the red ones, the result of the news, when this news happened, at that instant, that particular instant, those few minutes where the news is released, the market usually moves in huge volumes. So let me see if I can show you an example. Let's look at this news at 2:10, so around 2:10 p.m. when the chairman Powell spoke. If we pick a USD pair, so let's pick a pair like the let's pick a pair like this, and you look at that particular time, you will see that usually those kind of news, especially once the result is has there some it comes out better or worse. It doesn't matter what it does. If it comes out better or worse, traders are looking to take advantage of it. So if we go down into a lower time frame so that we can see um, okay, so this is around the time where the news was released. If you look at it, that's around 4. This is around the time when the news was released. And you see how even the market has been making some smaller candles, and then at the time of the news, see how the candlestick became larger in volume, and more profit or more movement is made in the market. So some traders who just trade on fundamentals, and they try to trade the high impact news and the quick volatility that associated with them. So that's how fundamental retail traders trade the markets. Now, besides fundamental trading, we have the technical analysis. Because beside fundamental, we have the technical. So there's sentiment, there's fundamental, and then there is technical. Now, technical analysis is what we'll be covering here mostly. That's what we'll be covering in our further courses, because this is the way for the others, for the fundamental, you need to look at the market news and all. For technical analysis, it's not like we're not concerned with the news. Yes, we're concerned with the news so that we know what news is coming up, but we don't um we're not so concerned about the news because we are more interested in the chart. So technical analysis is a framework by which traders study price movements that has occurred in the past in order to identify possible future direction or possible future movement of the market. Now, this is because price tends to repeat itself, patterns tends to repeat itself. And this is how the forex markets work. Let me bring up my pen. So if I do this, let me get a pen. This is how the market is. This is how the forex market usually looks. So the market is heading higher. It doesn't just go straight up. The market never does that. Just go from point A to point B. It never really does that. Instead, what the market usually do is even if it's heading higher, it goes in waves. So it goes in waves like this. The market moves in waves from point A to point B. It doesn't just go in straight line from point A to point B. Now, because the market usually does this, moving in waves, technical traders or technical analysts, we try to take advantage, we try to study the price movements because since the market tends to repeat the same thing, we can, study this and see how it works so that from future price movements, previous price movements, we can predict with some certainty what the future price movement will look like. And so because we know that the market moves in wave, that means even if the market is heading higher, what we're looking for is for opportunities to enter. And this is why you would hear traders say, as a trader, as a forex trader, what your job is to buy low and to sell high. Now, this is what they mean by buying low. You can see that the market is moving higher, but it's making waves. And when it makes this wave, it makes a low. So you can see that it made a low here before moving higher again. And then made a low here and moving higher here and made a low and moving higher. So traders, we don't want to the most consistent traders or the most profitable traders. You're always looking for, you're not trying to rush the market. You're waiting for the market to do its thing and then you follow it. So if the market is already moving higher like this, I wouldn't want to come and start buying here. Instead, I always wait for the market to, pull back. So once it pull back and start going up again, I would want to, enter the market and join it for the next swing. And if I miss this one, if it pulls back, I can join it. Even if I'm in that one, I can decide to add to my position again, and add to my position again, and add to my position again. And then when the market decides it is done going up, at least for the time being, you will start seeing the market making lower highs and lower lows. I hope this makes sense. So if the market is moving higher, is going upward, it makes higher highs. You can see that this high is higher than the previous high. This high is also higher than the previous high. This high is also higher than the previous high, and this high is also higher than the previous high. And also the lows, it makes higher lows as well. So it makes higher highs and higher lows. This high is higher than this one. This low is higher than this low. This low is also higher than this low. And this low is as well higher than this low. So the market, we can say the market is in an uptrend. So it's heading higher. But when the market is has the bulls or the buyers have exhausted their strength and the market is now heading downward. It also goes in waves. So you start making, okay, let me clean this up. It's too much on the screen. So in a downtrend, you would see the market making lower lows and lower highs. So you see the market doing something like this. And so you can see that the next high is lower than the previous high, and this one is also lower than this, and this one is also lower than this, and you can see it's making lows. This low is lower than this, and this low is lower than this. So when you see the market moving in this kind of pattern, this is a downtrend. So in this situation, what we look to do as traders, when you see the market making lower lows and lower highs, we are looking to sell, sell, sell. So if the market is moving like this, I'm not interested in buying, I'm more interested in selling. I'll wait for the market to pull back, make a new high, and I'll sell, pull back, make a new high, and I'll sell. So that is how you make money trading Forex, by looking for high prices to sell and looking for low prices to buy. Now let's go to the chart and see if we can understand this better or see this better. Now let's put this in. Okay, sorry. Let's put this in a daily time frame. Let me get this out of the way. So now you can see this. This is a 15-minute chart, and it doesn't matter what time frame you're looking at. The market always goes in waves. Can you notice? See this section here. If you see this, okay, let me use this instead. So if you see this section here, you can see that the market has been coming down, and it did not come straight down. What you see is it came down in waves. So it is making that lower highs and lower lows. Can you see it? So it came down, pulled back up, came down, pulled back up, came down, pulled back up, came down, pulled back up. So this is in this kind of markets, I'll be looking to sell. You get that? And then if you look at the markets here, okay, let me move this to this section. You can see that the market is moving up. So what you see here, it did not go straight up from point A to point B. It also made waves. So it moved up, pull back, moved up, pull back, moved up, pull back, moved up, pull back, moved up, pull back. So you see how the market moves. It moves in wave. And this, because of this understanding, that is how technical traders make their trading decisions, because they know that the market it moves in pattern. And notice this is the 30-minute time frame. If we go to the 1 hour time frame, it's still the same thing. You go to the daily time frame, it's also the same thing. The market doesn't move straight, it moves in waves. Now, granted, besides just moving higher and moving lower, there are times when the market moves in sideways. So let me also explain this here. So the market moves. There are three types of market trend. The market is moving higher, making higher highs and higher lows. Now that is for uptrend. Now when it's a downtrend, you see the market making lower highs and lower lows. There's also another type of market where the market is moving in sideways. Now for a sideways trend, you see the market is not making higher highs. It's just coming around the same area and it's not going anywhere. You can see that the tops and the bottom, forgive my line. So you can see that the top and the bottom are, almost at the same level. So this is okay. This is an example of an uptrend. Wow, this is an example of a downtrend, and this is an example of a sideways trend. So if the market is moving higher, it's an uptrend. If it's coming down, it's a downtrend. And it is moving in sideways, not making higher highs or making lower lows. It is moving in sideways. And the beautiful thing is we can make money in either market direction. So if the market is making higher highs, what we do is look for low prices to buy. So if the market is making higher highs, we are looking for low prices to buy, low prices to buy, low prices to buy. You get that? So if the market is moving up higher, 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 so what you're looking for is for the pullback. So once the market pull back, you can now find a good entry spot. And another reason why we wait for this pullback is because it gives us a level where we can put our stop loss. So when the market pulls back, we can now decide, okay, let us put our stop loss below this pullback. We enter at this point and ride the trend up to this point. You get that? And so when the market is moving lower, we'll wait for the high price, we'll wait for the market to pull back up and we sell. Wait for it to pull back up and we sell. Wait for it to pull back up and we sell. Now, in a sideways trend, you can trade any direction. So if the market, you can notice that the market is bouncing off certain areas. So let's say this wave has happened, and then this wave has happened. Now at this point you can buy and ride the market up to this point. And at this point you can sell and ride the market down, and then buy and ride the market and then sell. Now, in subsequent lectures, we would look at what will we know, what will help us determine whether we should buy or sell or maybe stay away from the market. But this is in the basic, this is just how it works. We wait for the market to make move, and then when we see the market moving in the particular direction, we trade the market in that direction. If the market is making higher highs and higher lows, what do? We look for buying opportunity. But if the market is making lower lows and lower highs, we look for selling opportunity. Now let's see if we can spot some in the chart. Let's go back to our charts and see if we can spot um, the trends. Now, if you look at this, I'm sure you can easily see that there's a downtrend here. So you can see the market. Let me do this. So let me start shape. Yeah, it's this. So you have okay. Okay, it's not as big as I thought. So you can see this that the market has been moving downward here. The market has been making lower highs. You can see it clearly. It's actually very clear. It's making lower highs, it's making waves. This high is lower than the previous, this one is lower than this is lower than this, and that, and so on and so forth. So in this market movement, we'll be looking for the high prices to sell. Remember, if you're selling something, you want to sell it, you want to sell at a good price, at a high price so that you can make more money. So we wait for the market to pull back at a high price, we sell. So you can sell if you've been imagine what you if you've been selling at these high prices, how much money you would have made. So we look for high prices to sell in a downtrend, and then when the market changes trend, because no trend continues forever. So a previous downtrend would now become um would easily become in an uptrend, or maybe change to a sideways trend. So in an uptrend, you will now see the market making higher highs and higher lows, higher highs and higher lows. Now at this point, you can see that there is kind of a sideways trend here where the market wasn't really going anywhere. So it was just moving in sideways, even though not as clearly defined like the one I drew, but you see that the market wasn't really going for further. And then this is another way how we used to spot change in trend. So when the market, usually what happens is when the market is coming from a downtrend or is going from being bearish to being bullish, it usually makes some sideways movement. So it goes from bearish, sideways movement, bullish. And then you can see another sideways movement, continued bullish, and then sideways movement, bearish. By bearish, I mean downtrend, and bullish remain uptrend. So you can see clearly how this works. So just like we explained, if the market is moving higher, it makes higher highs and higher lows, and when it's coming down, it makes lower highs and lower lows. And what we try to do is sell the highs and buy the lows. So if the market is coming down, we are selling the highs, and then when the market is now going up, we start buying the lows. You get that? And if the market is trending sideways, let me see this. So there's a sideways trend here. Let me zoom in more. Okay, let me use this. So there's a sideways trend here. You can see it there. So when the market is moving sideways, what we try to do is trade the boundaries. So you can sell here, and when the market is at the support, you buy here, you sell here. Trading sideways trend may be a little bit technical if you're new to trading. I usually encourage my new traders to stick to trading the well-defined trend because it takes much experience to be able to trade sideways trend better. And so when the market is trending, that is the best time to, usually that's the best opportunity you get until you get more advanced and you'll be able to trade sideways trend better. Now, when we look at our next couple of courses, you can see that this is a well-defined downtrend. It keeps making lower highs. You can see if you take a trend line and you can see clearly that the market has been trending downward. Clearly, it has been moving downward. Now, in our next couple of courses, when we now look into technical analysis proper, we'll now we'll discuss more on the trading, on how we can now buy or sell, what would help us to make a decision on buying or help us make a decision in selling? How do we know where we should exit our trades, maybe exit our trades for loss, maybe where should we place our stop loss, where should we place our take profit? That is what we'll cover in the next course as we are now done with the basics. So if you've not never heard of Forex, by watching the previous course, Introduction to Forex, and then watching this one, Introduction to Forex Part 2, you should now have a good, kind of fairly good understanding of what the Forex market is. You should also have a good understanding of how it is being traded and how you can assess it, and which is using the platform like we've been explaining. And then you have a brief understanding of good understanding of the platform itself. If you're on a mobile phone, it is quite similar, although you don't have as many features, but it's quite similar. You can be able to take your trades, place a new order, place pending orders, change your use whatever lot size or volume that it's suitable for your account size, and take your trades and make money. So in our next courses, if there's something you don't understand, you can always rewind and listen to it again. That's the beauty of having it online in this format. And if you still don't have questions, feel free. You can always contact your account officer or call us. Send us a message, and I'll be glad to answer your questions. I'll probably drop my social handles so you can reach me. But for now, this is where we conclude the introduction to Forex trading. And in our next couple of courses, this is where our previously existing traders would now probably be able to benefit, as we'll start looking at much advanced, we'll start small, but we'll start looking at, trading and much more advanced trading terminal things, and how we can technical analysis, and how we can make better trading decisions, how we can gauge the market properly, and enter and exit the market for profit like a pro. All that being said, I'm glad you've been here all through. Have a very lovely day, and bye for now.